Hello, everyone. Good morning from here. 10:23 a.m. from this part of the world, and depending on whatever time zone you are tuning in from, I wish you a good afternoon and good evening to you. My name is Sheriff Daramola, and today we are going to be delving into the market once again in preparation for the second half of the week. Today we are going to be reviewing how well the asset we've been monitoring since the beginning of the week has been doing, and of course go into the fundamental and technical understanding of what is really going on in the market with the intent of strategically positioning ourselves for the next move. And for those of you who are joining me for the first time, you are highly welcome. So the week has been a little bit choppy in the last 3 days. We saw the US dollar rose at the beginning of the week, but since then it has relinquished all of the profits it had, and right now price is back at a critical structure. And at the moment we are in a situation where we don't know if the dollar will continue to decline, or maybe it's just back right at the spot where it will pick up again for the second half of the week. So today we are going to be deciphering what is going on from both technical and fundamental perspective to really get deep into it. So as always, the first thing we are going to be doing is to look at the US dollar market dynamic, of course. Let's look at what is really going on here. Now, if you saw my video, you were in the session on Monday. Remember, we were using the $98.70 level as our key level for the week, a level which has been a strong selling niche since July, right? And look at how that level had resisted buying pressure. Every time price comes in, it breaks it. Buyers were unable to break through, and this pushed price to the downside. And not until last week we saw a successful breakout of that structure. And in fact, during the second half of last week, it served as a support line. As we can see here, price rose again for the first time into the $98.50 level in the last 3 to 4 months. Now, at the beginning of this week, we did confirm that we are within an ascending channel, right? And I went on to say that we want to see if this bullish move that broke out of the structure will stand. And of course, we saw a retracement on was it on Thursday? Yes, Thursday/Friday. And at the beginning of the week, we saw some buy pressure resume with an engulfing bullish candle springing out. And we were of the opinion that this might be the beginning of the second leg of the bullish momentum. And oops, buyers were unable to break out of that resistance line, even not able to get close. As we can see, the last 24 hours has brought price back into that key level. So right now, the question here is, will this level become a demand zone again? Well, before we even go to that, many might be asking, why is the dollar behaving the way it's behaving? Well, at the moment, the market is pricing in multiple rate cuts through the remainder part of the year, and that's eroded the US Treasury bond yield. The Treasury bond yield isn't doing well at the moment, and the dollar, traditionally follows suit with the US Treasury bond yield, and that's making capital more willing to drift towards other currency. Then besides that, there are signs that hiring and inflation are cooling in the United States, which help justify the shift in expectation. In fact, Powell himself has flagged the labor market as losing strength, which reinforces market confidence in easier policy ahead, and this of course is not looking promising for the US dollar. And if we also take into account the trade tensions, the geopolitical tensions and the like, for instance, the issue between the US and China, the tariff threats, and of course uncertainty around the which has of course boosted uncertainty around the demand for the US dollar. So for me, it appears that the dollar is struggling at the moment, and we might likely see this momentum continue to the downside. Now, if the dollar maybe at any point in time breaks down this key level, it becomes a resistant line at the site of resistance, we could see price drop significantly to the downside. Now, mind you, I need to extend this one so we can see. Okay, so we have the support line of the ascending channel right here, right? So we're going to see, even if the breakdown happens, we'll still have a bust up here where it could hold buy pressure and push price to the upside. So we will still need to see that support line get broken before we really get convinced that the dollar is going to drop to the downside. Okay, now going into today's trading session, there are a lot of things that market will be looking forward to for more clues into if there will be holding or continue to sell the US dollar. So if we look at the economic calendar for today, we have a bunch of Fed officials speaking today. So today is 15th of October, that's Wednesday, and look at what we have here. We have, you can see from about 1:30 PM UTC, we have Miran, we have Breeden, we have Wallace, we have Schmid, we have the Fed Beige Book too as well. So you can see we have a bunch of Fed officials speaking today, and any shift in tone, maybe hawkish or dovish, will definitely be triggering a significant move. Then besides that, there are no inflation or data to look out for today. Let's look for Thursday. So we have initial jobless claim coming tomorrow, but I'm not sure if that is going to be published due to the shutdown in the US government. We also have the producer price index as well, and the retail sales data. So it's very it's subjective. We're not sure if this is going to be released, and in the absence of this, it might really not give market a clue of what is going on. So market will definitely be looking forward to Fed speech to decide whether to hold the dollar or not. Then another thing that we need to also take into account while monitoring the US dollar is the global headlines. We want to listen to the news as regards to trade development, geopolitical moves, commodity prices as well play a significant role. I'm talking about US crude oil, gold commodity may drag or support the dollar if there are any form of spillover. So we need to take that one too into account. So today we shall wait for some confirmation. We really need some confirmation here as price is back into that key level at the 98.70 cent. Remember, this was a resistant line before the breakout happened last week. Let's see if it can serve as a support line or it will get broken to the downside today. So we really need some confirmations here. And for those who are day traders, scalpers who are looking for short-term trading opportunities, you could identify Confluence on shorter time frame, like the 15 minutes, 30 minutes charts, to identify zones and rejections to join a move. And we will be deliberating on that further when we go into the major assets and monitoring for the week. So I do hope I made myself clear here. If you have questions, feel free to let me know in the comment section. So we'll be moving into the assets we are monitoring for this week. So as always, the first one we are going to be looking at is the US oil spot, right? And since the beginning of the week, the price of crude oil has been dropping significantly, and this was further supported by the pressure from the IEA. Yesterday, I guess they warned of a possible oversupply situation in 2026 with up to about 4 million barrels per day in supply. Now, that for us is something, and from our simple economics, when there is a tendency for surplus in the market, you know what happens. Price definitely drop because the commodity is very much available. And besides that, the renewed US-China trade tension are also weighing seriously on demand expectations, and this obviously is not something good for the US crude oil. So we saw what happened at the beginning of the week. Price climbed up. I had a buy position triggered. Unfortunately, it did not do well. I got taken out of that position, and of course the sell position I took as well did not really do well. I think I was taken out at some point, and then I re-entered, taking out at break even. So to cut the whole long story short, for the US crude oil, I'm yet to be in some profit for this week. And if we consider the hopes of the Fed rate cuts expectations, this may limit the downside by supporting US economic activity. Now, when Fed says they want to cut rates, you know what happens. The dollar tends to decrease in value, and US crude oil, being a US dollar denominated asset, tends to thrive, because when the dollar reduces in value, the demand increases, because other currencies would now be willing to buy because the dollar is cheap. So when they are converting their local currency to dollar, it becomes cheaper, and then they can buy more oil. And if we take this simple economics into account and looking at the character of price action in the last 24 hours, you will notice how the $58 area appeared to have become a support line. Every time price comes in here, breaks it down, we saw sharp rejection springing out of this area. We saw multiple hammer candles, doji candles showing uncertainty around that area. And for me, this could be a red flag that we could be seeing a platform that could push price higher, maybe a sort of recovery back into the $61.20 level that was broken to the downside last week. And if we look at the distance between here and here, we are talking about over 300 pips to catch there. So will this be the case today? Well, time will tell. Now, as I am preparing for today's session, what am I looking at to guide my decisions? Now, scaling down into the 15 minutes time frame, this is what I was able to come up with. Now, look at what we have here. For those of you who are following me on my Telegram platform, you must have seen this update. So I shared this morning where we have a pattern looking more like a, what do we call this pattern? Is it a triangle pattern? Oh, maybe triangle pattern there is. So we have price consolidating at the moment, and the consolidation is happening in such a way that we are seeing a contraction as price moves through the consolidation. So it's getting thinner and thinner and thinner, as you can see here. And usually when we have this kind of structure, it gets to a point where there is no more room to contract, and then explosion happen from this side. It either goes to the downside significantly or to the upside. And one thing from my experience about this kind of explosion is that price usually moves massively once the direction is confirmed. And besides that, we usually see fake breakouts too as well, to shake a lot of people out of the market, gain some liquidity before finding direction it wants to move. Now, from what we have noticed here in the last 3-4 hours now, you'll see that price appeared to be trading above the structure. We've had a retest of structure, but one thing you will notice here is that buyers are finding it difficult to maintain traction. We had a breakout actually, but look at the nature of the sharp rejection here. We have multiple shooting star candle here, right? And this shooting star candles theoretically tells us that the market is we have a lot of sellers in this market. Though I bought the breakout of the $58.30 level, you can see at the bottom of your screen that position is not really doing well. And with the way things are going, I want to place a sell sincerely, because I want to place a sell and have my stop loss right above the $58.50 level. So I'd already placed a sell. I'm not closing the buy position. I'll allow it to run, and let's see how far that is going to go. Now, if price now moves close to the $58 area, I will be securing the sell position while I wait to see how the market is going to react to that level. Okay, so our center of focus for today is basically between the $58.30 level and the $58 area, as you can see here. Whichever the whatever direction the breakout tends towards will further determine where price is likely going for the second half of the week. So let's see how the market plays out. If we can see a breakout retest of the 58, I want to think that price will drop further to the downside, and I will be looking out for more selling ideas. I want to be adding more positions below this particular structure. So that is it from me on the US oil spot. Let's see how the market is going to play out going forward. If you have any questions, feel free to let me know in the comment section. I would love to hear from you what your thoughts are and what you're thinking, or maybe you need some further clarifications before we move on. So I will take about 5-10 seconds off to take some water, and then I will just be right back in a moment. Stay tuned in. All right. So I guess we are all on the same page, isn't it? So I will be moving into the next instrument on my watch list for the week. So I wish us all the best of luck on the US crude oil. So the next asset I'm looking at this morning is the GBPUSD. And on Monday, we had a range bound structure, right? Let me zoom in so we can see. Price was consolidating. We had price confined within the 1.33540 and the 1.33250 to emphasize the prevailing uncertainty at the beginning of the week. And you know how we use our range bound structure, of course. We want to wait patiently for price to give us a direction. It's either price breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, if we look at what has been happening since our live session on Monday, price is yet to break out of the resistance line, as you can see here, right? and as a result, we were not buying. Instead, we had a sell stop order below the structure and the resistance line. We had a buy stop order. The buy stop order was not triggered because price did not go that far, and then we had a sell stop order below the structure, which was triggered during the, I think, about 2 or 3 hours into the New York session on Monday, and stop loss right above the 1.3350, and we were lucky enough that price did not hit stop loss, as you see, and then price dropped all the way down, giving us about how many pips move? Not too much, about 70 pips moved thereabouts before buyers came back again, taking over the market from that 1.3270 area. Now, for those of you, you remember what the 1.327 is. I did talk about this in my video during the weekend, where I mentioned that we saw the 1.327 become a support line last week, and this was immediately after the hawkish comment from Catherine Mann, that is the Bank of England's official, who went on to say that inflation is still very high in the United Kingdom, and that the Bank of England will continue to consider restrictive monetary policy, which obviously gave the pound sterling some support heading into the end of last week. Now, this week the momentum was bearish at the beginning, and look at what happened as soon as price came into that support line. As you will see here, we saw buy pressure resume again, and it has brought price back into that resistant line we talked about at the beginning of the week, of that range bounce. And I think that triggered the buy stop order I have. Yes, because remember we had the buy stop order above the 1.335, I think so. Okay, yes, you can see that at the bottom of my screen we had the buy position triggered this morning. So it's still not doing very well at the moment. Now, the pound is gaining momentum, maybe because the obvious reason, the US dollar is currently weak on growing expectations of Fed rate cuts this year, and traders are watching the Fed officials' comment for clues on what to do at the moment. And remember, I told you we have a bunch of Fed official speeches coming up today. And while this expectation is on, the UK is also not giving us good signs. Yesterday we saw the labor-oriented data. We had the claimant count change, the employment change, the ILO unemployment rate, all from the United Kingdom. And this tells us one thing, that is, there is signs of a cooling UK labor market, and this may be holding back the pound sterling strength at this point. So the tug of war is between the Fed easing policy and the Bank of England pressure, which makes this pair a little bit sensitive to both sides. So we have the potential that buyers could come in, and as well the potentials that sellers could also come into play, right? Now, if we go back into the charts and look at what is going on now, price is back into that resistant line, isn't it? We have price back into the resistant line where sellers took over at the beginning of the week. Now, if we go up into the 4 hours time frame, so when we go up into the 4 hours time frame, remember that we acknowledge that price is within a descending channel, isn't it? And look at what is going on now. I think I have it more clearer with this new chart. I had two resistance. Okay, this is it right here. So if you look at it clearly, you'll see that price is now around that resistant line of the descending channel. You see, Price is right around the resistance of that descending channel. And look at what is going on when price got there. We saw a shooting star candle arise from this area. And theoretically speaking, this tells us that sellers are still very much in this market. And obviously, the market has been on a downtrend, right? So the question going into today's trading session is whether the pound sterling has the momentum to be able to break out of this structure, and that will be revealed in the character of price action in the next couple of hours. And for me to help me navigate this area today, we have a structure. So for those of you who are with me, yeah, you must have seen this. So this is the structure I'm looking at. That's the resistant line of a descending channel right there. And look at how buyers have been finding it difficult to break through, isn't it? So I initially bought. If you look at the bottom of your screen, you will see that a buy position is running. That is after the breakout of that resistant line I showed you at the beginning of the week. That buy position got triggered. But when I saw continued selling pressure below the structure, I had my sell position also triggered. So I'm going to allow both positions to play out. I already placed my stop losses on them, and I can afford to watch them make their run through as price action evolves, right? So I'm not in a hurry to close any of them. The potentials for buyers and sellers are almost the same. Now, if price goes on to break down this level here at the 1.33360 level, then I will be willing to add more sell position, and I will explain to you why that is. 1.3360 level, so you want to be marking that level out, right? So we have something like this. So if price can break down, retest the structure, I'm willing to add more sell positions to my trade, as this will for me show that sellers are strong. And remember, from a long-term perspective, we are within a descending channel. So that is what I will be looking at basically. And what will make me confident in buying or adding to my buy? Well, I need this 1.33710 to get broken to the upside. If it can get broken, then at this point, I will be confident that buyers have come to stay. So let's see how the market is going to play out today, as everyone looks forward to the Fed official speech coming up today. Do we have any other event from the UK coming up today? Okay, we have no, we don't. Okay, Braden is going to be speaking. This is a Bank of England's official, so he's going to be speaking by 3:45 p.m. UTC. So we look forward to hearing what he has to say. So if you have questions, feel free to let me know. So I see your comment, Wokocha Kingdom. Wokocha says, are we selling the oil from the current price? I think we talked about that. Let me look back at it again. No. Wokocha, this is what we said. We said that we already have a buy position triggered, right, initially. And I went on to say that if price stays above the structure, we feel more confident in the buy. Now, while I was explaining this, I saw the potentials in the sellers as well, where after taking into account these shooting star candles that we saw here, so I placed the sell around this current price. You can still do that if you don't mind, and of course have your stop losses right above the highest point here. That's about 25 pips if I'm correct. And then looking forward to see if price will break down again, retest the structure, then we could be adding more to that trade. So that is what I'm saying. So I have both the buy and the sell running at the moment with the stop losses in place. Whichever ones moves, then we are fine with it. So I hope I made myself clear on that one. So if there are any questions, feel free to let me know. So I will take another 5-10 seconds and I will be right back in a moment. All right. So I guess we're all good. So let's move on to the next asset on our watch list. So the next one we are looking at is the USDJPY, right? And this is the structure we looked at the beginning of the week, right? We also had a range where between the 152.280 and 151.740, and in fact the week started strong for the USDJPY. We saw multiple engulfing bullish candles, right? But unfortunately, the buy position we took had the break of the 152 also did not do very well. I got stopped out on that one, and as you can see, price had continued to find lower lows and lower highs ever since then. So as it is right now, the yen is looking strong, is looking stronger in comparison to the US dollar, as investors seek safe haven assets amid trade tensions, the US political uncertainty, and of course global risk. And of course, the hints of a potential government intervention in Japan have also supported the yen in the meantime. Now, concerns that the Bank of Japan may delay rate hikes also can cap this current trajectory it is taking, making Fed policy direction critical for the next move. And that is why the upcoming Fed official speeches today is going to be playing a significant role in this market, right? So for those of us who still have a sell position running, remember we said we will be selling below the key level and the 151.740. So if you in any way are taking advantage of that opportunity, kindly move your stop losses and secure them right now. My own sell position has been taken out. I moved my stop losses to somewhere around the 151.380. So I got taken out this morning after this little consolidation going on here. Now, to help me navigate the market today, what am I looking at? What structures am I banking on to reveal to me what is really going on in this market? So this is the structure I shared with us this morning on the USDJPY. So as you can see, at the time I shared this structure, I had the range, right? We had the range bound structure. As you can see, price was confined within the 151.250 and the 151.040. Now we saw price come into this area, did a retest, but wasn't a successful retest as price climbed back up. And I don't know what happened here. I had a buy stop order above the 151.250, but I don't know how that position did not get triggered, because I can't find it in my trades here. I don't know what happened, sincerely. But for those of you who followed my my commentary this morning, you must have a buy position running right now, which is in a minimum of 13 to 10 pips currently running in profit at the moment. So let's see what happens from here. So for me, now that I missed out on this one, I would like to see price come back into the structure. If it comes back, retest the structure, I will be willing to join from here, or else I will just pass this trade and look for something else if the market permits me. So that's that on the USDJPY, right? Then I also noticed that we're beginning to observe some higher lows here. So when we connect the series of higher low, I think we have an ascending trend line to work with from this point. So let me mark that out and let's see how that could influence our next decision here. So look at that. We have a trend line, right? Okay, so this trend line here can play a significant role for today's trading session. So I will put okay, we are looking at the 151.4. hold on a second. 151.4. so I think I can join from this 151.40 level. So I will place a buy stop order above this area since I missed out on that first one. So I'll place a buy stop order above the structure and then place a sell stop somewhere around the 151.1 to give enough room for price action to move around. So I just placed a buy stop order above the 151.4. So for those who actually took the move earlier, we can add more buy at the break above of the 151.400 level. Okay, so let's see how this is going to play out today. Now, if this trend line here gets breached and broken to the downside, it could shift momentum in favor of the yen. Now, if I am going to be selling, I want to wait for confirmations to happen. And when I mean confirmations, I want to see price come back, retest structure, continue selling pressure before I join that sell. Okay, so that's what we're going to look out to join any sell at this point. We need some confirmations before joining any sell here. So let's take note of that one. So I wish us the best of luck on the USDJPY. If you have questions, I'll take another 5-10 seconds. Let's see if there are any before we move on to the final asset on our watch list. So right now it is a buy on the USDJPY. We continue to maintain this bullish bias and allow this newly identified trend line to guide our decisions going forward. Okay, so let's move on to the final asset on our watch list. So the final asset on my watch list for this week is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. Now, before I even go into the analysis, I want to say here that gold has been the only asset helping me to balance my portfolio in recent times. As you can see, US and USO spot for this week, same with the GBPUSD, just small, and the USDJPY too has been struggling as well. But the XAUUSD has been helping me to recoup the losses I've been incurring on those assets as I continue to balance my portfolio in that regard. And since the beginning of the week, we have been buying this asset. In fact, we had a simple structure marked out here at the beginning of the week. We had a range bound. Of course, the gold started strongly. We had a support here at the 3,998-ish. And then we had resistance here. And just right on this area, we had our live stream. And I did mention, okay, I updated us before the live stream that 4,059 price has moved over 1,500 pips in that direction, though I didn't take all of the 500 pips. Of course, I think I had my TP around the 4,120. I left the market around this area, and you know I don't trade on Tuesdays, so I of course missed out on this old move. And for me, it's in record high. Now we've tested another record high again this morning at the $4,218.50 level. Wow. as safe haven demand rises from this US-China trade tension. We also have the geopolitical risk and of course the prolonged US government shutdown. So, and if we look at the expectations of more Fed interest rate cuts this year, well, I guess the sky is a stepping stone for gold at the moment, and especially when the dollar is even getting weaker. Now, with uncertainty lingering in the air, investors will definitely continue piling into gold. Now, the headache we are facing right now is, one, prices within uncharted territory. We are within overbought conditions, right? We are within overbought conditions, and we need to be very, very careful. Then secondly, what path is it going to take? Is it going to retrace a little bit before the next wave happens? That is one thing we are not sure of. So this morning I updated us with a new structure I will be using to help me navigate this market. And as you can see, if you are taking that position, you must have made some profit this morning. I made about $21.33 this morning. Look at the my history right there. I bought it above that structure, moved my stop losses, secure some profit, and I got taken out with $23. So this was the structure I marked out this morning, and price is still within structure, and I think we could still have another buy from this particular area. So I'm going to be placing a buy right now on the gold. If you want to be part of this journey with me, you can join me right from this point. Hopefully it goes as we expect. I've made a lot from the gold this week, so I can afford to risk something from this particular area. So I don't know what's happening. I'm finding it difficult to execute a trade right now as it keeps, okay, finally it's gone through. So stop losses will be around the 4,184. I want to give enough room for price action to move around. And where will my TP to be at the highest point? I'm not sure if price can break out of this record high today, so I'll just place it right there. I don't want to be too ambitious on this one. So let's see how the market will play out here. Price is still trading above the ascending trend line, which further supports the uptrend scenario that we are looking at. So this trend line here has captured price since yesterday. This is the last 18 hours or so. Price still remains above the trend line. We saw the bullish move right here, came back to retest structure, and hopefully it will go to as far as the 4,230. But I just want to maintain myself around this highest point. That's about 200 pips, which I'm fine with, at least for today's trading session. Then we have a resistance line here. That's the record high again, 4,218.50. Let's mark out that level just in case price action break out and retest that structure. If it does, then we will be looking to add more, but we need to be very careful. If I can make this one, even if a breakout happen, I'll take some time before I jump in. I'll take some time. Allow the old choppiness to evolve before jumping into that position. Okay, now, okay, we're already in profit already on gold, but it's still very small. But let's see, let's be hopeful that it continues that way. Now, in as much as we expect a bullish move today on gold, considering the geopolitical tension, the US government shutdown, the US-China trade tensions, and the geopolitical risk, we cannot ignore the potentials that sellers can come in, definitely, because we are within uncharted territory, right? And when market is within uncharted territory, some of us might be asking, what do I mean by uncharted territory? These are areas where price has never been before. So it does not have a memory to guide trading decision. It does not have a resistance line from the past. It does not have a support line from the past. So we all need to be very wary of potential moves to the downside. We could see profit taking activities happen anytime as market don't feel comfortable staying there and price could just crash to the downside. We could see choppy market conditions or even retracement move as market get familiar with this particular structure. So this is very, very important. So we could see sell happen. Now, if I want to sell, I would want to see some confirmation happen, which is very unlikely in this situation, because if sell happens, it's going to go down very sharp. But if it comes down in such a way that we have a breakdown, retest, and it'll not give us enough time to jump in, I will enter. But if it doesn't, it's all well and good. I'll allow it to play out, then wait for new setups where I could look out for more buying idea. Obviously, the gold's trajectory is to the upside. So that is basically how I'm going to be managing my trade on the gold. So gold is already in profit right now. I would advise you to move stop losses as soon as price gets to about 50 pips in profit. I usually look for when I'm trading gold, I usually look for bigger pips, like 100, 150 pips. I'll be moving my stop loss until price gets to about 50 pips in profit. So currently it's about 30, 35 pips. So I would like to see it going to 50 pips before I take some profit. But if you're a day trader, short-term trader who is scalping the market, you could move your stop losses right now, even take your TP at the moment. But for me, I'm patiently waiting for price to get to at least 100 pips before I start considering taking some profit off the market. And secondly, I can afford to risk some of the profit I had made on gold this week. So that is what you have from me on the gold commodity for today. Simple trading setup, and let's allow this ascending trend line guide our trading decisions today. If you have any questions, feel free, or clarifications, feel free to let me know in the comment section. I'll take another 5-10 seconds off. And don't forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions today. Why not support the project by giving the video a thumbs up? So I'll be right back in about 5-10 seconds from now. See you soon. All right. So in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery. So this week we are monitoring, I am monitoring 4 financial instruments. So we talked about let's run through it one more time for those who are just joining in. So we have both buy and sell position running on the USOIL spot. We bought above the $58.30 level. We saw some signs of selling moves, and then we sold, right? And that sell is not doing very well, while the buy is doing well at the moment. So let's allow the trades to run. I don't like moving my stop losses, shaking myself out of the situation because I saw some 15-minute moves or so. So let's just allow the trade to run its course, like I said. And if price goes to break down the $58 area, a retest of structure will definitely confirm more selling ideas. Then we went on to talk about the GBPUSD, where we confirmed that price is still above the trend line, and that anything above the 1.3352 maintains a bullish bias, and we look to sell or had more sell at a breakdown of the 1.336. So a further breakout of the 1.33710 will further confirm the strength of the buyers in this market. So let's keep that in mind. Mark out the structures or screenshot my screen if you want to use this as a guide for your trading decisions today. Then we went on to the USDJPY, which has been on a downtrend since the beginning of the week, and we noticed on the 50 minutes time frame that there is signs of recovery in the USDJPY. I shared an update this morning, buying above the 151.250, but unfortunately for me, I don't know what happened. I placed that buy stop order, but I can't find the buy stop triggered on the USDJPY. So I said we shall look to add more, and as it is right now, another buy position just got triggered at the 151.400 area. Hopefully this will continue to the upside, and of course we can make some significant profit this week. And like I said, on the USDJPY, this trend line here will be guiding our trading decisions today. So as long as price remains above this trend line, we maintain a bullish bias. The only condition that will make us sell is for this trend line to get broken. And then I said here that we shall look for confirmations like retest of structure before jumping into the sell. And finally, the XAUUSD, and price had already moved 50 pips right now. So I think it's high time for me to move my stop losses to break even. So it's about 50 pips now if you are taking that move at the point I shared the entry. So I moved my stop losses to break even now, okay, while I continue to monitor price action on the gold. So the trend line on this one too will be guiding our decisions going forward. So I wish us all the best of luck on this one as well. So that is that for me today on the gold, the USDJPY, the US crude oil, and the GBPUSD. So I wish us all the best of luck today. And for those of you who are joining for the first time, I do hope you are able to gain one or two things from our discussions today. And if you did, why not join us on Friday, same time, as we come here again to review how well these assets have done and prepare ourselves for the final trading day of the week. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.